This is Eat, Sleep, Invest, the marketing podcast for real estate investors to get more deals. Hey, welcome back, everyone, to another episode of Eat, Sleep, and Invest. I'm your host, Brian Driscoll, and I'm here with Dave Dubeau. What's going on, Dave?
Brian, those are three of my favorite things. I love to eat, I love to sleep, I love to invest. Great name for your show. I am doing swimmingly. Thanks for inviting me.
Excellent. So, hey, Dave, why don't you give everybody a little bit of background on what you do?
Yeah, so these days we work with everyday investors, or what I like to call mom and pop real estate investors, and we help them to leverage their network and raise capital. And quite often we will help people raise six figures in a matter of weeks and even up to seven figures in a matter of months.
Okay, that's pretty solid too, because I talk to a lot of investors, especially the guys getting into the business, and I'm usually telling them, hey, just go find the deal. You'll figure out what to do with it when you get the deal. But then when you get the deal, then you go into panic mode because you just promised somebody that you're buying a property and closing in 30 days, right? Or whatever the time is.
Yeah. Yeah, man, that's one of my pet peeves. So I respectfully disagree with you because I hear a lot of people, especially the gurus, saying, hey, just find a good deal. The money will magically find you. And BS is what I say to that, unless you've already got a group of potential investors already lined up, kind of waiting in the rings, ready to jump onto your next deal. So if I could wave the magic wand for all of your listeners, it would be, hey, let's line up the investors. Let's line up the joint venture partners. Let's get that capital lined up first. And then you go make offers on deals. Because, Brian, you know this. If you know you got the money taken care of, you can run in there. You can make, unconditional offers. You can close on deals a lot faster. You can negotiate harder because you know that you've got the money back to back you up. So, yeah, that whole find the deal, the money will find you, that bit me in the ass. Forgive the language. I hope we're allowed to use the occasional
you're good.
Bad word there. That bit me in the ass big time years ago when I was first starting this, because like a lot of people, I started off self-financing my deals. So usually most people can do their first deal or two. If they're like you and they're doing the burrs, yeah, you can recycle that money. But it really does, if you're using just your own cash, it really limits the scalability of your business unless you've got super deep pockets. So I did my first two deals, ran out of cash, ran out of credit. And of course, that's when the perfect opportunity landed in my lap. And I got the property under contract. At that time, I was doing single family homes and kind of a lease option kind of a program. So I had my tenant buyer all lined up. They give me a nice big fat non-refundable option fee. They'd given notice where they're living. I got the property tied up. The seller, I had 2 weeks traditional type idea to come up with financing. And then it was like, oh crap, now what do I do? Now I got to scramble to find this money. So that was around the time I think that movie, The Wolf of Wall Street, was out. Do you remember that? And Leonardo DiCaprio and Jonah Hill and all those guys made it look like so much fun calling people up and selling them stuff, dialing for dollars, cold calling people. So I said, hey, I'll try that. Call, reject, rejection. Couldn't handle that much rejection. I'm too much of a sensitive soul for that. So I quit cold calling. But that had burned up a couple of days putzing around with that. Then I remembered somebody else had given me the advice. They said, hey, if you need to raise capital quickly for a deal, go out and talk to people, right? Go turn every conversation into a real estate conversation and get some investors that way. So, okay, I'll try that. I ran out to the local B&I, Chamber of Commerce, Toastmaster, wherever the hell they'd let me in the room with my 30-second elevator pitch. And basically all I got there, Brian, was a bunch of strange looks, a bunch of people kind of avoiding me and talking to other folks, and zero capital, which makes sense. I mean, I wasn't trying to raise a hell of a lot. I think it was 85 grand or something like that. But why on earth would a complete stranger lend you money? They don't know you. They don't like you. They certainly don't trust you with their money. You're starting from scratch there. So I was running out of time. I can remember this vividly, and even though it was a long time ago. I had 3 days to go before I had to come up with the money. And I was sweating. And I came up with a brilliant idea. I said, hey, if enough people see this deal, because I structured it all out so it was quite attractive for an investor. If just get enough eyeballs on this deal, it's going to sell itself. So I did one smart thing out of this whole experience. I did one smart thing, Brian, and that is I put together a target list of prospective investors. So just kind of like you guys do, you laser focus on one area for finding motivated leads. I decided I'm going to laser focus on my existing connections for prospective investors. I only needed one, so I put together a list of a couple of hundred people. That was smart. But then I spammed them all with my deal. I put together a little PDF and I emailed that out to everybody. I remember that was on Wednesday. Thursday morning comes up and I get up and I'm so excited because I got some replies to this email. Thank God, I finally something worked. The cold calling didn't work. The schmoozing didn't work. This internet marketing thing with email is going to work for me. Until I started reading the responses, and they were pretty much all said something like this. Hey, Dave, dude, I haven't heard from you in quite a while. One guy hadn't heard from me in 18 years, Brian. And this was the first thing that showed up was, hey, it's Dave. I got a great deal if you got 85 grand. Bottom line, they all told me to take a hike, and that deal collapsed. I ticked off the property seller, my realtor, their realtor, home inspector. My tenant buyer had already given notice where they were renting. It was a pretty tight market at that time. Had to give them back their, I think it was 15 grand or whatever they gave me as an option fee. It was a mess. And I live in a fairly small town, so I had some pretty serious egg on my face. But you want to know the worst thing out of that whole experience?
What's that?
Is because I was so clumsy about it, because I just charged in like a desperate bull in a china shop, I turned off a lot of really good potential investors. And, when you burn those bridges, it's hard to mend that again because like they say about a first impression, right? So that was the worst thing about all that whole experience. And when the smoke cleared and I finished licking my wounds and pouting, I said, there's got to be a better way. So I knew a thing or two about marketing. So I came up with a process which worked really well for me, which was, hey, let's get the money lined up first. Let's do some consistent communication. The one smart thing I did was I created that target group of potential investors, but instead of just pitching them deals, let's edutain them a little bit about what we're up to with real estate investing. And ideally, instead of waiting until I got a deal on the go and then calling people up, why don't I get meetings booked with these folks, get them engaged, get them signed on to do a deal with me before I've got that next deal lined up? And it works so much better, especially if we create curiosity with the marketing like you guys do, right? You put out the marketing, you get people to click on that, they put up their hand, they're showing the interest, they're coming to you instead of us chasing after them. So we apply that same process for raising capital.
Yeah, and that makes sense. I thought you were going to have a happy ending in that story.
No, it is a happy ending. It is. In that I learned from my stupid mistake, and I help a lot of other people avoid making those same stupid mistakes.
I was waiting for you to tell me everyone told you to go pound salt except for one person, and you did the deal.
No, that one person even told me to go pound salt.
Okay, and you know what? So this is interesting. So I talk to a lot of investors, and I think a lot of the guys starting out too, when they're looking at finding money, they're picturing something other than the real people that are going to give them money. Like what? So you built that list. What types of people were you putting on that list?
Yeah, good point. So I know the best way to start when it comes to private money is your existing network, right? Leverage the people that you know. So friends, family members, co-workers, business associates. If you're self-employed, it could be clients or customers, people you know from church or civic organizations. Like I go to Rotary, so that could be if you're part of a sporting team, if you go to play Little League or slow pitch or whatever. People that you know and who know you. You've got that pre-existing relationship. That's where we want to focus first, in my opinion, Brian, for a couple of reasons. Number one is just logic. Like if we're just getting started with raising capital, a lot of people are out to lunch and they think, hey, I'm just going to go find an accredited investor and they're going to fund everything for me and I never have to worry about it again. Well, good luck with that. I mean, you're going in there with zero track record, zero credibility about working with investors, and everybody and their dog is going after these, high net worth, high income individuals. So good luck breaking in there. So a much smarter place to start and a much safer place to start is your existing network, right? You bring on a friend or family member as a joint venture partner with you in a deal. They put in the money. You bring the knowledge, the deal, and the team and the management, and you share in the results, right? So, of course, yeah, you have to share the profits with your investor partner. But here's the good news. You don't have to put any of your own money into that deal. And if you're doing stuff like you're doing, Brian, where you're doing the BRRRR, well, that same investor can do multiple deals with you, right? Because you could recycle their initial investment once you pull it out. And, they're getting a good return. They still have ownership in that property. Why wouldn't they reinvest with you? So it becomes kind of a perpetual motion machine.
Right. Now, how do people make those conversations when they're talking with their network not awkward?
Yeah, good point. Yeah, because it can get awkward, and we've all heard that, hey, never do business with friends and family. That's a recipe for disaster. So, couple of things here. First thing, I'll tell you how to start that conversation. Second thing, I'll tell you how to work with friends and family so you're setting yourselves up for success instead of failure. So the first thing is, how do we start that conversation? Well, what I always recommend, I'll just give you a brief overview. So once we've created that list of a couple of hundred people of prospects, right, our network, we want to avoid doing what Dumb Dumb Dave did, which is just charging in, trying to pitch deals. What you do instead, what works like gangbusters, is to do just a simple series of communications, like email communications, 2 or 3 of them. I call this a warm-up campaign when we do this for our clients. So the first email goes out, it's just a written email, and it's catching people up on what you've been up to for the last 3, 4, 5 years. So at the time that we're recording this, we're coming out of the whole pandemic thing, so everybody went through a shitstorm for the last number of years with everything that was going on. So chances are you have lost touch with some people. So just catch them up. Hey, chances are it's been a while since we connected. Just want to reach out, say hi, see how you're doing, let you know what I've been up to. So here's what's been going on with me and the family and work and all this kind of stuff, fun stuff and not so fun stuff and trips, whatever you're into, right? So have if you're going to print this thing out, it'll probably be about a page printed out. And then at the end of it, you say, well, okay, enough about me. How about you? How are you doing? Please hit reply to this email. I'd love to catch up. And you set that up with, you're probably familiar with email autoresponders and all that kind of stuff. So something simple like MailChimp or something like that. And send that out to all 200 people on your list. And then here's the job. Reply back to people that get back to you. So if you got 200 people on that list, don't worry, not all 200 are going to respond, but you'll probably get, between the whole thing, you'll probably get 30 to 40 responses total. And there's capital in those responses. And this just really sets the stage. So the first few messages that goes out are just kind of warm and fuzzy like that. And then here's what I do. Here's the magic sauce here, Brian, for transitioning into the real estate conversation. So my third message goes out like this. It says, hey, it's Dave. It's been really good reconnecting with you over the last week or so. Just want to let you know that moving ahead, I plan on doing a much better job of staying in touch and letting you know what I'm up to with real estate. Real estate's something I'm really passionate about. I'm doing really well with it. And in fact, I think real estate's the best way for everyday folks like you and like myself to get an above average return on our money that's backed by something solid, real, and tangible, and that's real property. And hey, who knows? Maybe sometime in the future, you might even want to partner with me and share in the profits. But you know what? If you're really not interested in real estate, that's okay too. You can always click unsubscribe at the bottom of any of my emails. You'll be zapped off my list immediately. Of course, my feelings will be crushed temporarily, but eventually I'll get over it. In the meantime, if you haven't had a chance to get back to me, please hit reply to this email. Let's catch up. Send that out. And now we have set the stage. We have primed the pump. We've reconnected with people on a personal level first. So those 30 or 40 people that have responded, we've had a little bit of back and forth with them. And now we've let everybody know that we're going to start the marketing, right? We're going to start talking about what we're up to with real estate investing. And then the trick is, Brian, to have constant, consistent, edutaining communication. Edutaining means a little bit educational and hopefully a little bit entertaining. Because one of the mistakes I see people making all the time, if they even do try to do anything like this, is they try to take all of the knowledge out of their head and transpose it onto the other person. And here's the thing. Your friends, family members, coworkers, business associates are not real estate weirdos like us. And I say that with respect and love, right? But we are. I mean, hell, here we are. We're doing podcasts about real estate investing. Our businesses are all around real estate investors. Everybody we hang around are real estate investors. Most people aren't that into real estate, right? So a big mistake is to assume that they want to learn everything we know. They don't. They want to get maybe the gist of it. They want to know that you, Brian, know your stuff, and that if they partner up with you, you're going to take good care of them. That's really what they want to know. Okay, so we keep it light. We keep it consistent. So when we're doing this stuff for clients, at least once a week, something's dripping out from them. You know, an email's coming out once a week. It's different stuff. One week it's a electronic newsletter. Another week it's a video log. Another week it's a blog post. Switch it up a little bit. But that constant, consistent, edutaining communication, and then a clear call to action at the end of each one. So, hey, if you'd like to find out more, click here. Let's have a conversation, see how this can work for you, right? That takes them to an application form, the whole thing, kind of like what you guys do. And then you get on a Zoom call, kind of like what we're doing here, and you walk people through a presentation, get them enrolled, get them to sign off on an expression of interest. And then the whole job is, let's get a bunch of those expressions of interest lined up, and then we can go make offers because we know that we've got people lined up ready to go for our deals.
Yeah, and that's a good process too. I like that because everyone always thinks, hey, I got to go hit up my friends and family, stuff like that. It's all awkward. But you're right. That is a lower awkwardness, just touching base and then letting them know what you do. And then, hey, if you're interested, I'm investing in real estate if you want to get in on it.
Right. And then they reach out to us, right? It's instead of us trying to pitch them our deal cold over the phone, we're creating curiosity. We're getting them to put up their hand and say, hey, Brian, that burr thing you're doing, that sounds cool. I'd like to find out more. That conversation is a complete 180 from us trying to convince somebody that what we're doing is cool, right? Let's get them to see for themselves that it's pretty interesting, see for themselves that it's in their self-interest to reach out to us, and then give them a good experience when they do.
Hey, what % do you see on average guys given for the money if they're doing JV?
Yeah, that's a really good point. It really depends on the market. So, for example, we got a lot of American clients in different markets. So, for example, we got somebody in Seattle. Well, the price of properties up there is crazy. They're typically looking to, if they're doing single-family homes, they'd rather just have one joint venture partner on for a deal. So that could be anywhere from $150,000 to $200,000. We've got other clients that are working in areas with more affordable housing. So that might be $20,000, $30,000, $40,000. We've got some folks that are doing tax liens, tax deeds, raw land type stuff. Their minimum investment might be $20,000. Who knows? So it's all over the board. But here's my rule of thumb. The fewer investors you have involved with a deal, the better, right? So if it's a small deal, like I believe you're doing single family homes, if I were you, I would really just focus on one investor per deal. That person brings in the down payment money. That person brings in the renovation money. That person might even qualify for the financing for that property. They're bringing all of that to the table. You're bringing the team, the expertise, the knowledge, the management, the ongoing management of the whole thing. So it's a real win-win situation.
Yeah, are you guys doing seeing people do 50-50? Or are they giving the guy with the money 30% or doing straight 50-50? Or what do you see? I know it's different for everybody, but...
Yeah, for smaller deals, it's usually 50-50. And some people will go, well, why would I do that? Why would I give 50% of the deal up? Well, here's why. You can do a hell of a lot more of them, right? So you can do your own thing and recycle your own money, which nothing wrong with that. But usually, sooner or later, the bank's going to stop financing you for what, their bank rules, and they're super conservative, especially up here in Canada, they are. So some banks, they'll only, no matter how good your financials are, they'll only give you 5 mortgages. So then you have to figure other stuff out. So you can only scale so far on your own. If you really want to kick things up, you have to start using other people's money. So this is the most effective way to get started with that.
Okay, great. And then, hey, Dave, if anyone wants to reach out to you, because this is what you help people structure on how to do that with their own network, what's the best way to connect?
Oh, thanks, Brian. So my website is moneypartnerformula.com. That's everything about who we are, what we do, how we can help you. And if you go there and if you like what you see, you can click on the book a call and we can have a conversation and see if it's a good fit for
Okay,
you.
that's great. And then who is the target audience, like the best people that work with you?
Yeah, the best people that work with us are, everyday real estate investors, mom and pop real estate investors who've self-financed their first few deals. They're looking to scale things up, or they're active real estate investors that are just kind of hitting the wall with self-financing their deals, and they're looking for outside capital. And maybe they've taken a crack at it themselves before, but they haven't had much success, and they're looking for a better way, a more efficient way to do it.
Okay, great. Hey, everyone, we'll have that link in the show notes. Hey, Dave, thanks for coming on. We appreciate you.
Thank you very much for having me.
Hey, everyone, thanks for listening. Yeah, get out there, crush it, close some deals. We'll see you next time.